Hello everyone, Nagesh here. Welcome back to the channel. I hope you are doing good. In this video, we are going to discuss about the stock market, what we can expect from the Nifty for coming week. Because if you see the global market and the global sentiment, it's in negative. But if you compare to global market and our market is Indian market is doing very good, and it is not falling like like Dow Jones or any other global cues. Okay, this is the Dow Jones chart. If you see the Dow Jones pattern, this is the pattern I can see in the Dow Jones. We have a one, almost two, three, this is the fourth time the price coming to this particular resistance. After price came here, the price falling like anything. Okay, yeah, it is fell from here to here almost what 8%, 8.17%. And let me go to the 1 hour time frame. This is the Dow Jones. On Friday, what happened? The Dow Jones opened gap up at 7 or 8 o'clock. When the market opened, the Dow Jones was trading at 350 plus point. But after that, after after 2 hours, the price went down like anything. So this is the Dow Jones. The Dow Jones fell from August 17th. Okay, remember August 17th. Let me go to the our Nifty chart. Same pattern I can see in the Nifty also. Okay, if you see the Dow Jones, same pattern, again same pattern in the Nifty also. In the Dow Jones we have 1 2 3, this is the fourth time the price coming to this particular resistance area. In the Nifty also same, 1 2 3, three resistance, fourth time the price came to this particular resistance level, but it got broke. So from here it went almost almost consider that 1.78%. But if you see this, let me zoom it. If you see this area, okay, if you see this area, the candles are not so strong, but the price was opening gap up, because after this candle again gap up, again gap up. After these two particular candle from August 17th, Dow Jones fall from here to here almost, as I told you, almost 8%. Okay, but in August, let me delete this so you can see the price correctly. So this is the August 17, that candle here. So as per the Dow Jones candle, it is fell after the August 17th. Okay, same thing it would have happened here also if our market wanted to fall, or it if you are expecting any very good fall from here August 17th, but it fell around from here after this red candle. It fell around almost 3%. Just consider that 3%. After this two particular red candle, it recovered. Okay, initially what happened, this was the resistance we had. This resistance got broke. Now this particular resistance becomes support. Okay, after this recovery candle on 23rd of August, you can see this particular candle, this red green candle, it was gapped down on August 29th. So let me see August 29th. In the Dow Jones, if you see this particular candle, red candle, it fell around 3% on Friday. Okay, there is no wick at all. If you let me zoom it. If I zoom, no, there is no wick at all. The candle was very brutal and very strong. So this was the Friday. But what happened in Nifty? As I told you, after this particular green candle, when the price again closed above this trend line, the trend line becomes support now. So this 26th of August candle, it was not gone anywhere. It was down around 36 points, around 0.21%. Why this gap down happened? Because of this particular red candle. Because US market, the Dow Jones closed on Friday night 3% down. On Monday, what happened? It gapped down from here to here almost 2.30% on Monday. But the Nifty is not continued the fall from here. Once the price opened 2.5 percent down, the buyers came in. They they recovered the price at least what 1.40%, 246. It is showing in the minus because it is open gap down, but it got recovered. If the market wanted to continue the fall, this particular candle would have not formed. It was keep on fall like this. We could have seen this kind of candle in Nifty also, but it is not happened in our Indian market in the Nifty. And the very next day again gap up, it closed, it went around 2.56%. It was a fantastic rally on 30th of August, it is closed above this trend line. Okay, as I told you two times, this particular resistance is now acting as a support. Okay, after this very good gap up and 2.5% rally, again this two particular candle, it is it is not formed anywhere. Again it gap down, again it tried to recover, it recovered almost, but again the sellers pushed the price down. And the Friday, what happened, the market did not go anywhere. It opened slightly gap down or a gap down, but closed above this trend line. If you see the trend line, it is closed above this trend line. So this trend line is acting as a support now. Okay, so what we can expect in coming days, we can expect there is a consolidation level. Still there is, we can expect a very good consolidation level here only. And if you see the Dow Jones also, it was falling. So what we can expect, the Dow Jones may come till here. Okay, this was the support level. It may come here, from here it may bounce back. In the meantime, what we can expect in the Nifty also, same thing. We may expect same consolidation level from here only, and we may expect some correction also. If you see the price from here to here, there is no proper correction. Okay, the correction is pending, so we can expect a very good correction from here like this. It already corrected. If you see technically, it is already corrected around 4%. From here it is it is going up from here. What the price is almost 2.48% up. So this was my expectation, and it may consolidate a few more days here, and after that it may continue the trend. Okay, why I am telling you that it may continue the trend is, let me go to the weekly time frame. Okay, let me delete this so that you can see the price. Let me delete this one also. This is the weekly time frame. If you see the weekly time frame, this particular trend, this candle, this green candles, this looks very strong, right? So no need to panic, or don't do any panic selling. If you do, so what happens, if you do any panic selling and all, it will correct for some time and again it will short up. Whatever the stock you are holding, hold. I mean, I'm not telling you that you just hold. Once your stop loss hits, you have to exit. For example, I trade only channel pattern and the triangle pattern. Let me explain what is my plan. Just consider that the price is any particular stock is trending like this. Okay, trending like this. What you will do, you will just see this particular pattern. So example, I'll take myself only. I'll take I'll see this particular pattern. Okay, this particular pattern. Let me draw. What I do is, I'll just see whether there is any buying movement here or not. If I see any very good bullish engulfing candle or any bullish pin bar, I'll just enter here. I'll just enter here. I'll just keep my stop loss here, and I'll keep my target 1:2 or a 1:3. Doesn't matter how the market is performing, or the global cues are bad, or our market is not performing well, or market is consolidating. It doesn't matter, because the rule is simple. If you see any setup with a very minimal risk, you just go ahead and enter. Enter with the stop loss. I'm not telling you that just blindly go and enter or take some random stock. No, whatever pattern you trade, it doesn't matter. Okay, if you see very good setup or very minimal risk, very good risk to reward ratio, you just go ahead and enter. Don't care about the stop loss hits or not. That is up to the market. We cannot control that. We don't have any control over the market. Okay, what you can do, whenever your stop loss hits, you have to exit. Whenever the stock is going favorable to you, you just hold as long as possible. That's it. You just have to follow your risk management and basics. That's it. Because if you see the global cues, it was falling from almost 18th August. It fell around 8%. But if you see the Nifty, it not fell like that 8% and all. Okay, our Indian stock market is not giving a damn about global cues. Okay, if the Nifty also followed global cues, Nifty would have almost corrected around 5 to 6% or 8%, same as Dow Jones, right? But our Indian market is not following the global cues. My final point is clean and clear. If you see very good setup with a very minimal risk, go ahead and enter and keep your stop loss. if your stop loss hits, you have to exit. That's it. You have to follow your rules, keep on doing the same thing again and again. You will be profitable in the long run. Okay, you don't have to be wait for some correction, some news or a good news or something like that. You just have to pick right stock at the right time so that you can make money in the stock market. Okay, so this is the analysis on Nifty for coming days. So if you learn something from this video, or if you feel that this content is valuable, please hit like and subscribe and click that bell icon. And if you have any doubt, please comment below. And thank you for watching this video with the patience. See you next time. Peace.